Mixed session was seen in the broad-based benchmark US stock indices yesterday, where NVIDIA ex-post earnings rarely fizzled out, and it ended the session down by -5%, dragging down the SPX 500 and the Nasdaq 100 that closed in the red yesterday. Interestingly, the Dow Jones Industrial Average and the Russell 2000 outperformed, where the Dow closed almost unchanged, and the small cap Russell 2000 rallied by 0.5%. Over in the geopolitical space, US and Iran talks got nowhere yesterday, where it created a wild swing in the WTI crude oil prices, and we now start to see mixed reaction from both sides, where the US delegate sounded we call it unoptimistic going forward, but however both sides decided to try for another talk that's to be held again next week. The US dollar ended mixed yesterday, where we continues to see strength on the Aussie dollar, and the dollar yen failed to actually break above the 156 mark resistance. Very good Friday and very good morning and happy Friday. Welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Today will be the 27th of February 2026. So before we kickstart today's Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so just to make sure that the screen is moving. Okay, good. I think everything is fine. All right, so let's have a quick recap what has taken shape yesterday in terms of the news flow, the respective, we call it impact on the broad-based cross-asset classes. So let's start with the state of the US stock market first over here. So what I could see over here is that the SPX underperformed yesterday, followed by the Nasdaq 100, which is down by -1.16%. But what's interesting over here is that the Dow Jones Industrial Average outperformed, closed almost unchanged, positive 0.03%, and the Russell 2000 is up by 0.52%. So what causes this mixed performance among the four major US stock indices is due to the we call it the ex-post earnings performance of the AI juggernaut NVIDIA. So what I could see over here is that NVIDIA closed in the red -5.46% after it failed to break above the key range resistance at 195.95, which I highlighted yesterday, and that created a negative feedback loop within other semiconductor stocks like Broadcom, which is also down by -3.2%. And that also created a negative feedback loop in some of the mega cap technology stocks like Apple down by -0.47%, Google down by -1.8%, and Amazon down by -1.3%. But if you look at the entire heat map of the S&P 500, we don't see a slew of deep red, but in fact, there are various sectors that managed to outperform, like the financials, the real estate, the industrial, and in some form the basic materials. So if we look at the 11 sectorial performance by looking at the groups, we see financial, real estate, which is REITs, industrial, and basic material outperforming the broad-based stock indices, which is the S&P 500, and even some from the energy managed to gain marginally by 0.17%, the financial up by 0.84%, that I explained. Deeply in the red is the technology sector, dragged down by NVIDIA underperformance of -5% yesterday, creating a general negative feedback loop in technology sector, which as a whole down by -1.6%. So that actually explained to us the underperformance of the S&P 500 and the Nasdaq 100 yesterday because of its heavily skewed towards the technology sector. So just have a quick recap of NVIDIA. So NVIDIA continues to trap within this range-bound performance over here. So what I could see is that yesterday I do highlight there's this key resistance to watch, 195.95. So earlier on, there was a pop-up to $200 right after 5 a.m. Singapore time yesterday after the release of its earnings, but it cannot maintain its momentum and it slid downwards. And yesterday, during the normal US session, there is no positive follow through, and it continue its intraday decline, closing down by negative 5.46% with and it ended the US session with a closing level of 184.89. So it seems to us that it will continue to actually be range bound between the medium-term pivotal support level at 16955, which is also very close to the 16955, which is over here. So this medium-term pivotal support level is being seen since the low of 25th of November. So since November until now, it's likely to be trapped in this sideways range configuration. But one thing positive is that it still managed to hold above this rising 200-day moving average, and as well as this medium-term ascending channel support from the low of 7th of September, 7th of April last year, 2025. So overall, what we could see is that for sure, the NVIDIA, in order for it to gain better traction, on the positive side, it got to have a clear daily close above the 195.95 key range resistance level. Unless until it cleared above this level, then potentially we may able to see better momentum spilling over into the SPX 500 and the Nasdaq 100. All right, so that's for the state of the US stock market. Over to the state of the FX market. So the FX market continues to trap in a sideways range yesterday. So this is the 5-day rolling performance of the US dollar against other major currency as we are speaking right now, 27th of February, Singapore time, 11:14 a.m. So if you look at from a 1-day rolling performance in the last 24 hours, we now start to see the dollar weakness coming back into the Aussie, coming back into the Kiwi, and in fact also coming back into the dollar yen as well over here based on the last 24 hours, a 1-day rolling performance where the dollar continues to slide against the Aussie, against the Japanese yen, and against the Kiwi. So the fact that the dollar yen can't break above 156 psychological level give rise to a bit of intraday downside momentum on the dollar against the yen over here. So very quickly, let's look at the movement of the US dollar index. So the US dollar index continues to trap inside this sideways range, all right, since 12th of February. So over here, after that, there's a little push up, can't break above the 50-day moving average, acting as a resistance at 98.05. But however, it also can't break down below this near-term support level at 97.27, which confluence very closely with the 20-day moving average, and as well as this ascending trendline support that has been in play since 27th of January this year. So net overall seems to us that unless we are able to see a clear bearish breakdown below 97.27, then potentially we may see a much more broader based US dollar going forward in general. So for now, we may start to see mixed performance among the major US dollar pair, given that the US dollar index continues to be trapped between 98.05 and 97.27 for now. All right, over to oil price over here. So oil price yesterday ended almost unchanged, 0.15%, the West Texas crude oil over here, but can't break above the 67 psychological level. So the reason being that this fluid situation between US and Iran got kicked down the can again. So yesterday, the third round of talks between US and Iran ended with no conclusion over here, where both US and Iranian officials agreed to reconvene nuclear talks as soon as next week, after the latest round of discussion ended in Geneva yesterday with no clear conclusion. But based on sources, a person familiar with the US position, that's from the US standpoint, saying that the Americans were leaving Geneva disappointed. Over here, there was a disappointed with regards to the progress of the talks. So going nowhere. But however, from the Iranian side, they were more upbeat, citing good progress and significant progress over here. Right, so there is a lot of a mixed bag reaction from both sides of the house over here. The US sounded disappointment based on the sources, whereas from the Iranian side, touting good progress. So that actually causes oil prices to have this intraday wild swing between the support level and the resistance level. So that I'll share you guys what are the key levels to look out for from the shorter term basis. So it seems to us that there will be much more volatility going forward in terms of the oil price, given the fact that the next talk is being kicked down the can down the road to be held next week again over here. Right, so there must be much more we call it volatility in terms of oil price and also in terms of the precious metal as well, which continues to hold firm above the 20-day moving average on gold XAU/USD. All right, and before we go to the second segment of the day, let me share with you other economic data that has an influence, especially on the dollar yen as well, and as well as the Nikkei 225 over here. Right, so early today morning at 7:50 or 7:30 a.m. Singapore time, we have the release of the Tokyo core CPI data. All right, so Tokyo is leading. Okay, in Japan, it's a bit strange. Let me talk about the inflation trend in Japan. So in Japan, there's a nationwide Japan CPI data. And prior to the release of the nationwide CPI data, 2 weeks earlier, they will release the Tokyo area CPI data. So Tokyo area CPI data tends to have a leading element to the nationwide CPI data that will be released 2 weeks later. So Tokyo one market participants will view as a leading inflationary trend for the nationwide inflation data that will be released 2 weeks later. So for the Tokyo core CPI data for the month of February, it inched down below the 2% level over here, but it came in slightly above expectation. Market expecting is 1.7%. It came in at 1.8%, and the ex-food and energy, which is the core CPI data, also slipped down to 1.8% from 2%. All right, over here. So the reason why it slipped down is because of food subsidy and energy subsidy that's being distributed by the current administration. So that being said, over here is that it will put Bank of Japan gradual interest rate hike policy into a potential limbo over here, given the fact that it slipped down below the longer term BOJ inflation target of 2%. But one thing encouraging over here is the retail sales spending. So retail sales spending for year-on-year for January actually outperformed market expectations. So it managed to rise positively to a gain of 1.8%, way above what market expecting of a negative growth of negative 0.4%, and also managed to recover significantly from last month December print of negative 0.9%. So with this upbeat retail sales figure that managed to offset the negativity that's been seen on the Tokyo ex-food and energy core CPI data, that doesn't allow the dollar yen to rally past the 156 psychological level. So that just explains why the dollar strength against the yen is being kept because of due to the positive retail sales spending. So given if retail sales continues to manage to remain upbeat, that could actually allows BOJ to actually remains its continuation of this gradual interest rate hike policy. Because if retail sales continues to remain upbeat, potentially Japanese consumer are getting more confident, they tend to spend more. Eventually, it will start to see a gradual increase in inflation trend as well due to robust consumer spending. So that is linking the dots over here. All right, so let's sum up the first segment of the daily dose. So let me now move on to the second segment, which is the intraday technical outlook, which I will cover all, given the fact that today we will have some key important US data coming out later on, which I'll share with you guys what are the data to look at over here. All right, so now let me expand my screen so that you guys could have a better view of the charts. All right, so let us start with the FX market. Okay, starting with the euro dollar. Okay, so the euro dollar continues to hold yesterday with our first support level during the 2 a.m. mark Singapore time on Friday, the US session, which is at 117.76, continues to hold above this higher low that has been formed, but still can't break above the 20-day moving average, which is very close to this week high, right? So this week high is at 118.33. All right, 118.33 over here. So with that, I'll be still having a very mild bullish bias over here since it's still holding above this support level with the key short-term pivotal support at 117.40, 117.28. So that was last Thursday and last Friday key minus swing low before it starts to see a series of higher low that's being printed out this week over here. Okay, so resistance level to look at for today will be 118.33, 33/118.60 over here, this zone over here. So unless we're able to see a clear bullish breakout above 118.60, then potentially the bullish bias will gain traction to revisit the previous minor swing high of 9 of February and 11 of February at 119.27. A bearish breakdown below 117.28 will invalidate this mild bullish bias to see the continuation of this corrective decline sequence unfolding further towards the next support level at 116.73/116.32, which confluence with the 200-day moving average and as well as the minor congestion area of 19th of January and 20th of January. Right, so that's for the euro dollar. Next up will be the sterling pound over here. So the sterling pound also dipped down yesterday, managed to survive the 200-day moving average before bouncing back up again. Our pivotal support level at 134.90 that we expressed yesterday. So it seems to us that this sterling dollar has this kind of wild swing between the 200-day moving average and the breakdown of the 50-day moving average yesterday. All right, so with that, I will have a neutrality stance for today. So neutral from yesterday's level where it managed to survive, which is the 200-day moving average, and also the last Friday minor swing low area at 133.34. Right, so this seems to us that it's now potentially has transversed into a range bound scenario for today potentially. All right, so let me adjust the levels over here. Okay, 135.34, which is the 50-day moving average. 35.34. Okay, so neutral between the 50-day moving average where it got broken down yesterday, but after that managed to find support at the 200-day moving average. We also confluence with the minus key swing low of last Friday and last Thursday at 34.34. So neutral between 134.55/34.34. Upper limit of the neutrality range will be the broken down 50-day moving average, where it triggered that steep intraday decline between 12 a.m. Singapore time to 1 a.m. Singapore time yesterday, early Friday, which is at 134.34. So only a bullish breakout above 134.34, then the bulls will be able to gain traction to see a intraday push up to revisit the 20-day moving average, I think, as the next intermediate resistance at 135.88 next. All right, so that's for the sterling pound against the dollar, flipping to a neutrality stance for today. Next up will be the Aussie dollar over here. So the Aussie dollar continues to hold firm right exactly at our pivotal support yesterday, which I highlighted, 70.70, right? 70.70 over here, managed to form a bullish reversal candlestick, which is a bullish hammer that confluence with the very closely with the 20-day moving average over here. And also what we could see at this point in time, the RSI managed to shape a higher low over here, and as well as the RSI managed to stage a bullish breakout from its resistance level. All right, so indicating that the bulls are still managed to hold the fort in the Aussie dollar after surviving exactly at the 70.70 short-term pivotal support that we highlighted earlier. So no change, 70.70 short-term pivotal support level, maintain that mild bullish bias because we are now seeing a significant resistance at 71.40 level that got tested 4 times over here. So 71.70 breaks, better traction for it to come, the next resistance to come in at 71.75, followed by 72.10 in the near term. However, a bearish breakdown below 70.70 will eradicate today's mild bullish bias to see it floating downwards to revisit the 20th of February last week minor swing low, and this Tuesday minor swing low at 70.35/70.20. A breakdown below 70.20 may kickstart another round of minor corrective decline sequence to expose the next near-term support at 69.80 in the first step, which is the minor congestion area of 5th of February and 6th of February over here. So that's for the Aussie dollar. Next up will be the dollar yen. All right, so dollar yen failed to gain traction above 157, and it continues to shape a lower high on the RSI after it flashed out a bearish divergence on Wednesday and continues to see a lower high over here. And right now it is now breaking below a parallel ascending trendline support level as we are speaking right now, indicating that there is some form of bearish momentum taking hold on the intraday basis on the dollar yen based on the negative element that I share with you guys on the hourly RSI. So with that, we will have a bearish bias, a mild bearish bias today using 156.83 short-term pivotal resistance level. First support level to watch will be the zone that confluence with the 20-day moving average at 154.95/154.65. Only a bearish breakdown below 154.65 will allow the bears to gain more traction on the intraday basis to revisit this next intermediate support level at 153.83, which is the former range top of 12th of February and 18th of February that got taken out and managed to survive on this Monday initial slide, which is very close at 153.83. However, if price action see a squeeze up above 156.83, today's bearish bias towards the 20-day moving average and towards the first intermediate support zone at 154.95, 154.65 will be invalidated to see a squeeze up to retest the 157.50 key medium-term pivotal resistance level, where previously this level was being we call it a feared of this potential we call it intervention by the Ministry of Finance that previously saw this dollar yen selling off from its 6th of February high all the way to the 12th of February low. Right, so that's for the dollar yen. Next up will be the major stock indices intraday technical outlook, starting with the Hong Kong 33. So the Hong Kong 33 kind of whipsaw around the 50-day moving average, but managed to survive at the key range support level that the price action managed to form a minor base since 6th of February, 13th of February, and again during yesterday's US session. And as we are speaking right now, is trying to reintegrate back above the 50-day moving average at the support at 26,454, 26,454. So it seems to us that it managed to form a range bottom at 26,285. So I'll be using 26,285, tolerable bit of excess. That will be my pivotal support for today, and it also being supported by this rising trendline support that has been formed on the hourly RSI as well. All right, and the hourly RSI now is breaking back above the 50 level mark, indicating some form of bullish momentum that has resurgent on a intraday basis for the Hong Kong 33 that is representing the Hang Seng Index. However, resistance to look out for today will be yesterday's intraday high during the Asia session before that intraday sell-off took shape yesterday. So that will be at 27,100. Then the upper limit 27,228 over here. So this will be the range resistance to look out for in my today's mild bullish biasness on the Hong Kong 33. However, a bearish breakdown below 26,285 will invalidate today's mild bullish biasness to see another round of minor corrective decline sequence unfolding to expose the next intermediate support zone at 25,970, 25,820, right, which is the congestion area of 8th of January and 31st of December last year. So that's for the Hong Kong 33. Next up will be the Japan 225 or the Nikkei 225 over here, representing the Nikkei 225. So yesterday we do have a bearish bias for the Nikkei 225 for it to float downwards, and now it's coming very, very close to our support level, which is our corrective pullback support level at 57,790. All right, over here. So there could be still a residual push down over here, coming very close to 57,790, which is all confluence with the rising ascending trend line support, a minor one drawn from the low of 6th of February. So potentially this could be the traction that the Japan 225 may undergo. All right, something like this. Right over here. So given the fact that it's potentially shaping this residual push down, so in terms of the put in a way that the reward risk ratio doesn't pace quite attractive to remains on a bearish side of the story. So I will be flipping to a bullish bias stance to look out for this residual push up to end, push down to end close to 57,790 using a short-term pivotal support level at 57,140, which correspond to the rising 20-day moving average as well, coming very close to 57,140. Flip to a bullish bias, all right, in any form of any weakness to head towards 57,790 first. First resistance level to watch will be the current all-time high area at 59,884, 60,075 for today. However, if price action don't meteorize as expected and continues to fall further, then potentially this corrective decline sequence may extend further towards the downside, towards 56,096, followed by 54,818, which correspond very closely to the rising 50-day moving average. So that's for the Japan 225. Next up will be the Germany 30, representing the German DAX. So German 30 managed to squeeze up, hit our resistance zone at 25,225, 25,330 before shaping that intraday pullback during the Asia session as we are speaking right now. So it seems to us that it's still trapped within this kind of range configuration, holding above the rising 50-day moving average, which was yesterday's pivotal support, or the prior day pivotal support at 24,847 over here. So with that, I'll be watching a first support level, which is yesterday's Asia session low, right before the start of the European session. Over here, 25,100. All right, 25,100. So unless we have a clear bullish breakout during the start of the European session above 25,330 with an hourly close above it, that means there's a breakout of this range, then I would tighten the pivotal support to 25,100. Okay, so for now, pivotal support remains the same at 24,847, just in case it continues to swing wildly inside this range again. After 25,330, potentially we may see the retest at the current all-time high area at 25,505 level. Okay, that was previously printed on 13th of January, above 25,505, potentially take us up to the next Fibo extension level at 25,800 next. However, if price action breaks down below 24,847, then today's bullish bias will be invalidated to see another round of choppy corrective decline sequence unfolding again, exposing the next near-term support level at 24,610. Breaking down below it exposes the key 200-day moving average, confluencing at the minor swing low of 2nd of February and 6th of February at 24,250. That's for the German 30. Next up will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30, I do mention that do keep a close watch of this key resistance level at 49,940, 49,707. Unless we have a clear bullish breakout above this level, the US Wall Street 30 may see a better bullish momentum traction going forward. So yesterday at the start of the US session, right exactly at the 10 p.m. mark Singapore time, it tried to probe again, can't manage to clear above 49,707 and did that pullback. All right, then pullback managed to survive exactly at the pivotal support that we highlighted, 49,079. All right, so with that, I managed, okay, given that the support level can't break, all right, so I'll be watching very closely 49,079 for a potential pushback up again towards the top of this range again at 49,707. So it's more like a range trading for today. So at the bottom of the range, holding above the 50-day moving average, 49,079, maintain a mild bullish bias, 49,707. All right. However, if we start to see a bearish breakdown below 49,079, then potentially this mild bullish bias will be invalidated to see further weakness towards this Tuesday minor swing low area, which is conferencing the swing low area of 6th of February at 48,710, breaking down below 48,710, exposes further weakness towards 48,388, which confluence with the swing low of 21st of January and 2nd of February. So that's for the Dow Jones Industrial Average, which is the US Wall Street 30. Next up will be the SPX 500. So the SPX 500 dipped down lower before managed to stage a bounce over here. So what I'm going to do over here is that it seems to be trapping inside this sideways range again over here. So there's this range configuration that is being held by this minor ascending trend line since 6th of February. But however, it can't clear above this descending trend line that I drew from the current all-time high of 28th of January, where it got rejected on Thursday. All right, on Thursday 5 a.m. Singapore time, which is Wednesday US session over here. So with that, I'll be watching very closely this pivotal support level at 6,822 over here for a potential push up to revisit yesterday's high, which is at 4 a.m. Singapore time, Friday 4 a.m. Singapore time, minor swing high 6,919 over here. So above 6,919 may see a probe to revisit 6,972, which is the minor descending trend line that has been in place since the current all-time high of 28th of January. However, if we start to see a bearish breakdown below 6,822, potentially that will offer further weakness towards 6,785, 6,769. Failure to hold above 6,769 may see it testing the medium-term pivotal support zone 733, 6,720, which is the minor swing low of 6th of February and the swing low of 18th of December last year. Okay, so that's for the SPX 500. Next will be the Nasdaq 100. So the Nasdaq 100 managed to bounce from our pivotal support zone at 24,955, 24,830 level. All right. So with that, I will have a mild bullish bias since it managed to survive at the short-term pivotal support zone. The upside potential trigger level will be at 25,076, which was formerly the previous range resistance, got broken up on Wednesday, but however, it can't survive yesterday and it did a reintegration back below it. So unless we have a clear bullish breakout and an hourly close at 25,076, then potentially we may see better traction to revisit this Thursday or this Wednesday US session swing high, which is at Thursday 4 a.m. Singapore time or 5 a.m. Singapore time at 25,430. However, if price action breaks down below 24,830, this mild bullish bias will be invalidated to see the Nasdaq 100 floating downwards towards 24,580, followed by 24,330, which is the congestion area of 6th of February and 18th of February, as it continues to trade within this complex sideways range configuration on the Nasdaq 100 that is still intact since the low of 6th of February. All right, so that sums up all the intraday technical outlook on the broad-based stock indices. Now, let me take you through the commodities market first, starting with the gold XAU/USD. So gold continues to trade in a very tight sideways range configuration over here. still can't break above 5,307, 5,320. So what we could do over here is that I will have a short-term intermediate support level to watch, okay, which is at 5,111. All right, very close to yesterday's US session intraday low at 5,130. So I don't want to tighten my pivotal support to 5,111 because it's still trapped within this range, just in case of the whipsaw. Unless we have a clearance above 5,320, then I will tighten my pivotal support to 5,111. So still having this bullish bias for this ongoing corrective rebound phase that is still intact since the low of 2nd of February, using 5,046 as my short-term pivotal support level for now. That confluence pretty much closely with the 20-day moving average. Above 5,320, then I will tighten it to 5,111 for the short-term pivotal support, for the next resistance to come in at 5,448, which is the minor swing high of 30th of January. However, a sudden push down and an hourly close below 5,046, that would invalidate this bullish bias and kickstart another round of choppy downward drift towards 4,960, followed by 4,842, which is the minor swing low of 17th of February. That also confluencing very closely with the 50-day moving average as well. So that's for gold XAU/USD. Next up will be the West Texas crude oil over here. So the West Texas crude oil managed to bounce at the 20-day moving average, which exactly at our pivotal adjusted short-term pivotal support that we highlighted yesterday at 64.15. And what's interesting over here is that if we look at the hourly RSI, so the hourly RSI managed to do a bullish breakout yesterday. And right now in the Asia session, it managed to stage a bounce right exactly at this parallel descending resistance, now turns into a pullback support level. So no change. We continues to have a mild bullish bias on West Texas oil. And it seems to us that it now formed a minor range configuration since the 20th of February minor swing high at around the 67 psychological level. So maintain a bullish bias, a mild bullish bias within this range using 64.15 for sure. That would be our short-term pivotal support level given the minor bullish reversal that was seen yesterday at the 10 p.m. Singapore hour mark. 67 level will be my mild bullish bias resistance level to watch for today. Only a clearance and an hourly close above 67 figure level will allow West Texas oil to gain better bullish momentum traction to retest the next resistance zone, which was the formerly 1st to 4th of August 2025 minor congestion area at 67.80. Above it, potentially seek out 69.08/69.35, which is the one-time Fibo extension, and a couple of Fibo extension cluster level. And going back in time will be the former minor swing low of 30th of July and 31st of January got broken down, now turns back into a pullback resistance level to watch graphically, also confluencing at 69.35. However, if price action don't goes up as intended and break down below our pivotal support at 64.15, then potentially we may float down lower to revisit the key 200-day moving average, which confluencing with the minor swing low of 6th of February and 17th of February at 62.38/62.05. All right, so that sum up all the intraday technical outlook on the broad-based cross asset classes. Today will be a bit longer because I covered the full suite of the daily dose, including what has the key situation or fundamental factor that has taken shape yesterday in line with the technicals. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for? So I mentioned that today there will be a key risk event in the US session. But before we head into US session, there is a key Eurozone economy preliminary inflation data up from the two countries that contribute significantly to Eurozone economic growth. One will be from France at 3:45 p.m. So France will release its harmonized inflation rate. So harmonized inflation rate will be their core inflation rate for the month of February at 3:45 p.m. Singapore time. So market participant is expecting an uptick from 0.6% year on year from the previous January print of 0.4% year on year. So that if that came in within expectation or better than expected, that could support the euro dollar and euro crosses. And much later, we will have the Germany harmonized inflation rate, which is the core inflation rate, coming in much later at 9 p.m. Singapore time for the month of February. Market is expecting a same rate of same pace of increase, 2.1% year on year for the month of February, in line with the same on par with the previous January print of 2.1%. All right, so during this time, it could influence the euro dollar, the euro crosses, and in some form, the Germany 30 CFD index. And this is the all-important US data, which is considered as the cost of doing businesses in US, which is the producer price index. So that will be released at 9:30 p.m. Singapore time. So for the core PPI data that strip out energy and food prices, for a year-on-year basis, market is expecting a slight drift downwards to 3% year-on-year from 3.3% previously. So that could potentially maintain the ongoing 2 interest rate cuts that is still being priced in by the futures market, the Fed Funds futures market. But however, if it starts to be much more than what market is expecting, let's say it continues to inch up higher at 3.4% to 3.5%, then that could potentially see a bit of dollar strength coming back on the intraday to do a mild push-up, and potentially we may start to see wild swing again on the major US stock indices within those range levels that I highlighted to you guys earlier on. And thereafter will be a rather quiet US session. All right, so that is the key data to look out for today, and that also sum up today's daily dose of market insights. Kelvin here signing off. I wish you all a wonderful and restful weekend, and we shall speak again on next Monday. Thank you.